Aloha everyone and welcome back to my channel. Join me as I take you on my investment journey and show you how I was able to retire and become a stay-at-home wife at age 30. If you're new here, welcome. Last year, I opened a new brokerage account with Robinhood and started another portfolio from scratch to show others how simple creating passive income is. If we rewind to November of last year, I talked about an infamous Schwab ETF, SCHD, also known as Schwab US Large Cap Growth ETF. Click the link above if you missed it. SCHD is still one of my favorite large cap growth ETFs. In fact, I'm still holding a position in SCHD.
Hi everyone! Having a good time, are you?
Today's the day I address the large ETF elephant in the room. Elephant, dragon, onion, call it whatever you want. Today, I'm talking about SCHD and why it just isn't for me as of now. Schwab US Dividend Equity ETF, or SCHD's goal is to track as closely as possible the total return of the Dow Jones US Dividend 100 Index. To pursue its goal, this fund generally invests into stocks included in that index. That index is designed to measure the performance of high dividend-yielding stocks issued by U.S. companies that have a record of consistently paying dividends selected for fundamental strength based on financial ratios. Provided on the Schwab Asset Management site are some highlights about this fund. The second highlight being the most thought-provoking to me. The fund can serve as a part of the core or complement in a diversified portfolio. Reason being is because there's a large community of investors who pair SCHD with SCHG and majority of the other ETFs I'm currently invested in. And even in the 8+ years I've been investing and keeping an eye on SCHD, I just still haven't felt the need to add it to my portfolio.
I'm not emotionally ready for a commitment of this.
Scrolling down to the fund details section, I want to point out its inception date. SCHD's inception date is October 20th, 2011, meaning this ETF has been available to trade for over a decade. The total net assets of SCHD is over $68 million and offers a very low expense ratio of 0.06%, right behind that of SCHG at 0.04%. I also want to point out the Morningstar category being large value. What is a value ETF? This is a type of ETF that invests into stocks and other securities that are considered undervalued. Value ETFs typically focus on companies that have strong financial position, stable earnings, and a history of paying dividends, which are the exact kind of stocks that are in the Dow Jones US Dividend 100 Index, but of large companies. Hence, SCHD being categorized as large value.
But I don't understand.
Now onto yields. SCHD has a distribution yield of 3.63%. This is definitely a higher yield than that of the growth ETFs I'm invested in. However, compared to the income ETFs I'm invested in, QDTE, XDTE, and JEPQ, 3.63% distribution yield is not a lot. But at least SCHD is still a dividend ETF. And who doesn't love dividends?
Tag me! Tag me!
Taking a look at SCHD's portfolio and holdings, you'll see a much different set of equities than I've mentioned in previous videos. SCHD's top holding is Cisco, which makes sense since Cisco has paid dividends quarterly for the past 17 years. Talk about longevity. Another big one is PFE, or Pfizer, who's been paying dividends quarterly since 1987. I implore you to take a look at the rest of SCHD's holdings by clicking on the link provided. It's quite interesting. Remember, all 103 of these equities held by SCHD have something in common. They all yield very good dividends. Honestly, this is a great way to diversify your portfolio with dividend-yielding stocks while keeping the upfront cost low. If you have room in your portfolio to do so, holding a position in SCHD might be a good idea for you. Schwab Asset Management kept it real simple with having only 10 sectors they currently invest into. Financials is their top sector at 18.73%, and the lowest sector being utilities at 0.03%. Again, ETFs like SCHD will help you gain exposure to multiple sectors for the price of one. Definitely something to think about if you need diversification in your portfolio. Next is distributions. Like all dividend-yielding ETFs, SCHD provides past EX dates, record dates, payable dates, and the amounts paid. As far as frequency, SCHD pays dividends quarterly with a distribution rate of 3.63%. Not bad, but again, that is lower than that of ETFs like QDTE, XDTE, and JEPQ. Now let's get into why I found SCHD is just not for me right now. If we take a look at SCHD's 3-month chart, you can see SCHD was down 1%. And speaking of JEPQ, in its 3-month chart was up a little over 5%. Changing to the 1-year chart, SCHD was up 9%, while JEPQ gained 12% in a year's time. And finally, on the year-to-date chart, SCHD gained a little over 1%, but JEPQ gained a little over 2%. Growth-wise, JEPQ beats SCHD. While we're comparing these two, we can't forget about dividends. JEPQ has a dividend yield of 9.53% as of December 31st, 2024, that pays monthly. Schwab Asset Management doesn't outright list a dividend yield, only a distribution yield. So the closest thing I could find was on Morningstar, stating that SCHD's 12-month yield comes out to about 3.64%. I don't know about you, but I'd rather get paid more and monthly than less frequent and, well, less. If you were to reinvest dividends back into SCHD or use a DRIP plan, which is something I take advantage of to grow my portfolio faster, because they pay quarterly, you would only be able to use a DRIP plan quarterly. With JEPQ, because they pay monthly, I can reinvest those payouts and strengthen my position quicker. And the more shares I own, the bigger the payout. Let's be honest, the reason JEPQ performs the way it does has everything to do with how the fund seeks to generate income. Call options. And if you don't remember, that is also the strategy used for QDTE and XDTE.
I just know before this is over, I'm gonna need a whole lot of serious therapy.
Yes. This makes JEPQ, QDTE, and XDTE a riskier investment because of the use of that strategy. And yes, SCHD has been in the game way longer than that of these other ETFs. But Lord Farquaad said it best.
Some of you may die, but it's a sacrifice I am willing to make.
I am fine with a little risk if that means I can have more cash in my pocket to use or reinvest. And right now, SCHD can't do that for me. Alright, that's enough SCHD slander. Even though some of what I've mentioned previously is not in favor of SCHD, I would like to point out that past performance doesn't always determine future results. No one can predict the market, but understanding what all these values mean and being able to compare charts can help you understand your risk and make an educated guess. So point blank, is SCHD worth investing in? My answer is that it depends on the investor and the investor's goals. I know, an investor's goal is to make money. But how much? And in what time frame? No doubt that SCHD is a great long-term ETF. I mean, SCHD not only provides growth and dividends, SCHD provides exposure to the Dow Jones US Dividend 100 Index, all for an affordable price under $30 per share. Does SCHD fit your goals?
I think I need a hug.
Phew, that was a long one. If you've stuck around this long, leave a comment on your thoughts about SCHD. Mahalo for watching. Like and subscribe to follow along. Till next time, bye-bye.